And I'm going to get our next guest on the line, talking about the fact that many of over 55s are so strapped for cash that they plan at least part-time to work until they're into their 70s. Here on the programme, Alan T for Maurice Boland.
Talk Radio Europe's Talk on Sport is proud to announce the Costa Cup Golf Summer Invitation Tournament at El Chaparral. For just €50, you get green fee, buggy and lunch. The Costa Cup, Sunday, June the 6th, with shotgun start at 9 a.m. There are prizes for longest drive, nearest pin, along with an awards ceremony and drinks, plus a Kudeka Charity Putting Challenge and other prizes including best and worst player. The Costa Cup El Chaparral, Sunday, June the 6th. Register now as there are only 80 places. So hurry and book early to avoid disappointment. Email info@costacup.es or call Matt on 952 799 953 or online at costacup.es. See you at El Chaparral on June the 6th for the Costa Cup with Talk Radio Europe. Talk on Sport.
Time to recuperate.
With what?
With coupons.
Recouponerate.
Yep, at Open Call through the 31st of May, they'll give you a €6 coupon for every €5 you spend, which means you'll save a load. And more if you make the most of the special offer.
That's amazing. A €6 coupon is a real bonus. A bonus coupon.
It's the open way of life. Come to Open Call and get your bonus coupons.
Sun, sea, sand, and a cool breeze. And Bando bikinis, plunge neck swimsuits in Indian prints, and bright colours.
It's time for refreshing prices. Emphasis bikinis for just €29.90.
At El Corte Inglés.
Did you know that more than 300,000 UK drivers are convicted each year for not having valid insurance? And as from next year, if there's no record of your UK-registered car having sufficient motor cover on the motor insurance database, you could face a fine, prosecution, or worse still, you could have your car seized and actually destroyed when you drive it back in your home country or are involved in an accident anywhere in Europe. This is a very disturbing thought. But those that have insurance with Liberty Seguros need not worry, because policyholders that have cover with this insurer are able to change and update their details on the MID's website, www.askmid.com, at any time. What's more, upon taking out cover with Liberty Seguros, information relating to your insurance policy will automatically be added to the motor insurance database and managed by the Motor Insurers Bureau to give you ultimate peace of mind. This information was brought to you by Liberty Seguros, Spain's leading expatriate insurer, offering quality insurance at an affordable price. Take out fully comprehensive car insurance before the 31st of May and get a Sol Red petrol voucher worth €50. That's about a full tank of gas gratis. So to find out the name of your nearest broker, visit www.libertyseguros.es/expatriates/EN. That's www.libertyseguros.es/expatriates/EN. Liberty Seguros, because you never know. Conditions apply.
The highly successful Over 50s show, the lifestyle event for the Coast seniors, is back again this November for the 4th successive year. All the popular attractions will be featured: Eric Knowles of the Antiques Roadshow, health presentations, food and wine tasting, finance advice, free computer and golf lessons, fashion, hobbies and much more. If you want to exhibit and be part of this proven success, which attracts huge attendances every year, call us on 902 003 896. The Over 50s show at the Palacio de Congressos, Estepona, on the weekend of Saturday the 27th and Sunday the 28th of November. Be at it. Be part of it. The Over 50s Show.
Linear Director, sponsors of the time on Talk Radio Europe.
Yes, indeed, and it's literally just coming up to 50 minutes past 12. Get it the right way round. That is midday here, Central European Time, on Talk Radio Europe.
Don't miss Linear Director's special spring offer. Call them before renewing in May, and they will beat any price from your current car insurer. Now's the time to call 902-123-259. That's 902-123-259. Not valid for renewal, subject to card payment and documentary proof. Linear Director sponsors the time on Talk Radio Europe.
It's Boland in the Morning, weekdays on Talk Radio Europe. Alan T.
Yes, that's me sitting in for Morris for today. He'll be back tomorrow on the programme. Now, my next guest, this is, I think, a subject that's going to affect a lot of people. We all hear about the problems that expats are receiving their pension having lost value because of the exchange rate over the last 18 months. But it's now been revealed in the UK that 1 in 5 people over the age of 55 expect to have to work until their 70th birthday and even beyond. Research published today highlights the financial nightmare facing a generation, many of whom have a large mortgage but no savings or pensions, and their dreams of a relaxed retirement, spending time with grandchildren, gardening or taking holidays have been destroyed by a chronic lack of money. Well, joining me on the line now is Jonathan Davies, expert in wealth management and personal finance. Good day to you, Jonathan.
Good afternoon, Alan.
Good afternoon indeed, yes. I know it's an hour behind in the UK, but you obviously caught that one very, very cleverly. Well done, thank you so much.
I can tell the time.
Now, look, Jonathan, when I sort of actually read this, and I know that I've got friends back in the UK having real problems. You know,
Yep.
they've got a pension has completely destroyed them because there's nothing. It's just halved in value. But this is a common occurrence, and you said there's one particular aspect of savings over the last, sort of 30, 40 years that have really affected people today coming into retirement age.
Yeah, I would suggest to you that people have put far too much faith into one investment, although many people don't call it an investment, and that is property. They've come to the view that you simply can't lose with property, that whatever happens, your property will secure your retirement. And because of that, they haven't put enough into savings on the side. And then on top of that, as you say, savings have performed dreadfully over the last 10 years. So people are in a great bind, absolutely.
There's two aspects, isn't there, to put money into your property. First of all, if you're living in a property which, say, has increased in tremendous in equity and there's hardly any mortgage to pay, but it's locked, isn't it? You can't actually access the money. You're going to have to borrow if you want to borrow against that equity. And the other problem, of course, is if you've had an endowment mortgage. Endowment mortgages have been severely cut back, and some of them won't even cover the actual final payments, will they?
Yeah. I think if I take the latter point first, the endowment savings plan thing to eventually pay off a mortgage, I actually think that's a red herring because the numbers involved, people perhaps might have had, say, a 50 or a 70,000 pounds endowment mortgage, which means they were saving to build up 50 or 70,000 pounds. But people took out borrowings of £2 and £3 and £4 and £500,000. So the endowment is actually the minor issue. The major issue is about how do you get the money out of your property, and more to the point, what happens if and when property goes down. Well, the reality is that in the years leading up to the property crash, which started a couple of years ago, people were taking money out of property. Your listeners were downscaling from Britain, going to Spain, releasing sometimes six-figure sums, and expecting that was going to look after them for the next perhaps 20 years. Well, you just have to do the sums. If you release £100,000, well, how much do you spend in a year? It might only cover 5 or 6 or 7 years of living, and I think people didn't quite appreciate this. And they also believed, I'm afraid they've been taken to the cleaners here in many respects, that they also believed that property would carry on rising until eventually the price of an apartment was the size of a Latin American economy.
Yes.
Well, I'm sorry. I've been saying since 2006 and 2007 that the Spanish housing market was going to have the biggest crash in history. And sure enough, when you consider that in 2006, Spain built more individual dwellings than Germany, France and Italy combined.
Yes, I know.
Well, you know, I'm not saying anything that you guys don't already know, but the fact is people have been saving in the wrong ways.
Okay. Interesting you should say that, because as you rightly put it, the value of property in Spain, I mean, new properties, there are just so many empty, offering anything up to 60% discount and trying to sort of sell apartments and townhouses and villas here on the southern coast. And, of course, it has affected the Spanish economy exceptionally badly. Now, getting back to the point you made about the fact that people have looked at that, and they looked at the moving into this kind of lifestyle and so on, and they've seen their income eroded from anything they have back in the UK because of the exchange rate crisis as well. Just looking at it from the point of view of what is happening in the United Kingdom, I mean, we hear all these stories that the whole pension system has been almost destroyed in the UK over the last well, I suppose they say it's in the term of the Labour government. I don't know whether that's true or not, but there have been a lot of unusual things going on in pension funds, hasn't there, the last few years?
Yeah, well, for a long time, the pension world has been unreal. As we've been living longer, we haven't been putting any more into pensions, which has meant that eventually the pensions had to pay out for longer, therefore they would pay out less and less each year. On top of that, as we've had 2 or 3 decades of falling inflation, that has meant falling interest rates, which has meant that annuity rates have also fallen. So it's been doubly difficult. I would just say on the slightly positive, because it's been negative
let's have okay, that's great to hear a positive comment. Go ahead. We're all ears.
About the currency issue, it is certainly the fact that sterling was decimated against the euro over the last couple of years. But I might suggest to you, and this is certainly our firm's forecast, that sterling is now strengthening against the euro and will continue to do so for a long while. On the markets, we see sterling at 116 against the euro today. I'm afraid I don't know what that means at the bank or the post office. Probably around 113, 114, I guess. Sure. But I would not at all be surprised to see it up at the 130s, maybe even the 140s over the next 12 or 18 months. We see what's happening in Greece, and there's big cuts, of course, happening in Spain and Portugal as well, and this will have a detrimental effect to the euro.
Yes, I mean, indeed, so we're looking at that exchange rate, sort of going back to, I mean, I suppose we can call them the heady days of 2007, and when it was sort of 130, 140. And, I mean, at one stage, because we had it at parity, which was obviously extremely frightening for people who were sort of basically living on those incomes. It's and looking at some of the comments in the article. If we're talking, let's remind our listeners, we're talking with Jonathan Davis, who's an expert in wealth management and personal finance, and well, in fact, you do a lot of commentating for the national TV and radio in the UK, don't you? And there was recently you've done quite a lot of newspaper articles about this. When you said that you forecast, say for example, that crash back in 2006-07, I mean, us living here, we always referred to the national bird of Spain being a crane, which I think you know where I'm going with this.
Yes, I do.
You could look in any sort of direction, you'll see at least 13 cranes in any one direction. Most parts of, especially Costa del Sol, and I know Costa Blanca and Costa Amir equally, that amount of. And now you see sort of a lot less cranes, but not actually doing anything at all. They're not even moving because they're probably embargoed by the tax authorities or Social Security or some.
The construction sector in Spain got up to an absolutely massive 15% of the economy.
Yes.
I mean, that was totally unreal, and inevitably it was based on sand. There was no strong foundation there whatsoever. Unfortunately, in my case, when I was trying to get the message out there, people, it was very difficult to get in the media saying, look, there are problems out there. So unfortunately, your listeners largely didn't hear all the kind of things that people like me were saying. All they heard was, everything is wonderful, invest in property, you can't go wrong. I'll just say, when you see a bandwagon, it's normally the time to get off, not to get on.
Sure. That's very true. I suppose in some instances, people who are saying, looking now at the market down here and they want to buy, now is the good time to buy because the prices have come down so much, but there are other considerations, of course, as well.
Yeah, there are. I think, as I say, you just wait a little bit longer and you probably get even better prices, because the prices themselves will fall, but also in sterling terms, sterling will strengthen, so that will help for buyers even further. On top of that, I hear there are issues with healthcare for retirees. People assume that because we're in the EU that the healthcare will be exactly the same system as in Britain. You go along to the GP or the hospital and you get sorted. Well, of course, it's not often as simple as that, and people have to take very great care when they move to a whole different country, a whole different culture, as to the differences in the way of life and the way of doing things.
I understand, yes, I quite agree. And I know a lot of our listeners will certainly sort of take that point. And we do have a lot of programs here. We're always talking about people having problems with property and taxes and dealing with their situations, their work, their employment. Their businesses down here. So as a radio station, obviously, as our name implies, we do obviously have a lot of experts and people who understand what is going on. And one of the things that we've always tried to do, though, of course, we maintain a positive attitude to the situation, because I think although Spain has got a very high unemployment, there are now, of course, Zapatero's government is having to sort of begin to get a bit harsh, and he's obviously sort of saying they're freezing pensions, they're taking 5% off public sector employees.
Well, he's got no alternative.
He's got no alternative.
It's not really coming from within. It's not coming from him. It's
pressure from without.
It's coming from the European Central Bank saying you have to do this. Effectively, Zapatero has lost control of his economy.
You really think that, do you?
Well, yes, it's the same as Greece, the same as Portugal. There's no way that these guys would be making and Ireland. There's no way these guys would be making the cuts that they're making. The massive loan that Merkel has just signed off, the hundreds of billions of euros that have just signed off to your Mediterranean countries, it has come with strings, and the strings are cuts.
Yep.
And indeed, it's coming to Britain as well. And, we hear that Cameron and Clegg in the UK are now bringing in cuts. Yep. Well, I can tell you, you asked about the last 13 years of the Labour government. I can tell you that whether the cuts happened in the second half of this year or the first half of next year, if Brown had got back in, it wouldn't have mattered. They were all going to make cuts. Yep. And if they didn't make the cuts, then the IMF, the International Monetary Fund, would have come in and told us to do it. So that's the reason why Cameron and Clegg are doing it before they're told to do it.
Yep. And then getting back to the point about the pension problems, I mean, because people are living a lot longer, as you quite rightly said. Now, those pots of money that are there to cover those pensions, with interest rates being at an all-time low, because, I mean, when we had the last crash in 91, interest rates were about 16%. I don't think people today realise the difference between then and now in that regard, because the banks were sort of laughing all the way to wherever. It was a completely different environment back then, wasn't there, when we did have that crash? And this one, it's so global in its effect. And the biggest problem is the ageing population. And I think in some ways we have to accept that we're going to have to work, because the younger generation have obviously got to pay the taxes and pay for their pensions. They're not going to have anything at all when they reach retirement age.
It's all, Alan, it's all about demographics. We know about the baby boom. Post the Second World War, our rate of birth went through the roof, and your listeners, I think, largely will have benefited greatly. There were always jobs in the 60s and the 70s, even through difficulties, and the 80s. And then what was very interesting was that in the 90s, we saw lots of people retiring much earlier than people had ever retired. and with wealth accumulated, and particularly if they retired from the public sector, maybe from teaching or health or local government or civil service, they were given massive payoffs and huge pensions in their 50s.
Yes.
What's interesting, of course, is that just 10 or 15 years later, the money is no longer available to buy people off so easily.
Because they suddenly realise, my goodness me, these people are still alive.
Well, that's one way of looking at it. And when people saw others retiring early without actually having gone through great difficulties, they thought, well, we can do that as well. And hey, let's move to Spain, the south of Spain, and live the life of Riley. And I'm all for that, but I'm not sure they necessarily looked through the major global issues which were about to happen, and that's perhaps where they went wrong. And they hadn't saved in the right areas, and they hadn't saved enough. And there we are now, and on top of that, they had the currency issue, although that seems to be alleviating itself now.
That's a positive thing, isn't it?
It certainly is. It's a big positive, and whatever pensions they are getting from the UK will strengthen going forward. And indeed, if they're still, if they haven't yet bought their annuities with their pension funds, if they're still invested, I think you'll find going forward, maybe not this year or next year, but medium to long term, I think annuity rates are going to rise, so that eventually when they do buy their annuities with their pension funds, they'll get more bangs for their buck. That will be in the future. I will just make one point about the short term. If they are still invested in pensions, we are investment advisors after all. We significantly reduced our exposure to stocks, to equities in the last couple of months, because we think that the stock market is going to be pulling back quite significantly over the summer. So people should perhaps review their pension funds and not expect that pensions just go up and up as they have done in the last year.
That's a very interesting comment you made there, Jonathan, because obviously we've just been hearing about this rule that's just been sort of introduced, I think it was midnight on Wednesday in Germany, about this sort of this hedging, this short selling.
They can no longer short sell. They can no longer sell stock that they don't own, trying to make a profit.
That's right, and
when it loses value.
And of course, they were saying that in a lot of instances, of course, the funds use this, although they may not hold them. They use this, in fact, to sort of protect themselves by finding those extra profits if there's going to be not so much growth coming through, so that they've had that taken away from them.
The humorous side is that to make the serious point first, Angela Merkel, the Chancellor of Germany, she has banned short selling. I gather she's also looking at banning scoring against Germany in the World Cup, but I don't know if there's any truth in that assertion. But you know, these people who are in short selling, the city financiers, the hedge funds, they didn't create the mess.
No, they didn't.
They didn't create asset prices going down, but they see an opportunity to make money by what is inevitable. That's what they do.
And do you feel, or do you see that particular thing being extended? I know they've been talking about all these controls on banks in the UK and trying to sort of claw back some of that what they call gratuitous activity in the city. What do you think about that?
I think one of the major problems that we've had in the global economy has been the opportunity by the banks to run riot and basically do whatever they wanted to. And we wrote recently that they should split the banks from the retail deposits, the mortgages, the business loans, from the casino banking, the investment banking, where they're investing here, there and everywhere, and at 10 times leverage, which is, in other words, they rack up the amount they're actually investing based upon the actual pound that they're investing. And that is what's created, in our view, the financial collapse that we've had in a couple of years. And in fact, I notice that in a couple of months ago, Barack Obama was talking about splitting the casino banks from the retail banks. And indeed, curiously and delightfully, as far as I'm concerned, just today, the Prime Minister and the Deputy Prime Minister put out their statement as to what the coalition government is going to be doing in the UK, and they are actually talking about splitting the banks. And in the short term, that will undoubtedly create problems for us all. But, you know, in the long run, I think it will sort out many of the great difficulties that we've got ourselves in. And that's a major point. For decades, everything has been about the short term. It's been about the next election, the next couple of years. We mustn't allow house prices to fall 5% because that would create havoc. Well, you know, when they grow 100%, they fall 5%. I can't see what the havoc is. We might actually now be moving to thinking long term, and it will create 2 or 3 or 4 years of great difficulty. You guys are already experiencing it, but I can tell you, if we do have long-termist thinking, then maybe after we get through the difficulties, maybe we'll have 10, 15 years of growth, which of course we'd all want.
Yeah, indeed, and let's see if we can pull it off, because it's certainly a task, it's a mountain to climb. And I mean, obviously, let's take a look at, obviously the investment banks like Goldman Sachs, who basically are just that. They are the casino banks. Look at the money they're making, and I mean, with the fact that all the other banks, and the Barclays, the NatWest, the HSBCs, they've all got into it, and this is where a lot of the problems have originated from, haven't they?
They made fortunes for themselves while they have created losses for the taxpayer. I somehow think there's something not quite right there, that the taxpayer, in the name of our government and governments right across the world, have bailed out the banks, which is less than 1% of the population, and yet the other 99% of the population is paying for it. And we're paying for it not just this year and next year, we're paying for it for 10 years. Because as we know, taxes are going up, public sector budgets are going down, and therefore we're going to have great problems for 10 years. It just belies reason. I don't understand why they did it, but the fact is they did it, and there we are. We have to live with it. So we have to cut our cloth based upon our finances, and unfortunately we're not banks. We're not going to get bailed out by the government. We have to live within our means. We have to take a global view as opposed to a small view that perhaps the estate agent will tell us, or the mortgage lender will tell us, or the front page of the newspaper will tell us. We have to think laterally and think globally. What's really happening in the world? And what's really happening in the world is that we're going to have difficulty for 10 years, so we're going to have to live with it.
Oh, well, then we know now that we're going to have to sort of pull everything in and live frugally, I suppose, in the 99% of the world, as you quite rightly say there. And let's sort of keep positive and say, hopefully, that the governments in Europe and across the world will be able to achieve what we expect them to achieve. And obviously, with the present low interest rates abound, of course, that means that savings are taking a hell of a knock. That's got to change, isn't it? Just on a final note.
Well, yes, savings will improve when we move from broadly deflationary circumstances to broadly inflationary circumstances. That's when you'll get more bangs for your buck. You put £1,000 in the bank, instead of getting 1%, you'll get 3, 4, 5%. But again, I'm sorry, I say it as I see it. If you're getting 3, 4, 5%, it's because the cost of living has gone up. You know, take quality advice, take proper advice, and you know, we've had this mantra, you can't lose with property, and we've had this mantra that stocks and shares only ever go up. Well, that's not necessarily the case. People need to review their finances, not just in their own accounts, but also what's happening globally and economically, and take all that into account. And that's the way people can individually improve their finances and their living standards.
Well, I can tell you, Jonathan, I know colleagues in this industry that work out here are sort of saying very, very similar things to you. It's been a pleasure to talk to you. Jonathan Davis, expert in wealth management and personal finance. Thanks for coming on the line today, and a fascinating article. And obviously, we sort of think of ourselves now, okay, be prepared, we're going to have to work longer to make ends meet, and we just have to go and grin and bear it, I suppose. And it's something we can't get around. But let's be positive. Let's sort of say, right, we'll work for that, and hopefully things will improve.
Indeed, and individuals can improve their lifestyles, but only by working hard and working smart.
Very true. Jonathan, on that note, thank you very much indeed for joining us today here on Talk Radio. It's been a pleasure.
And to you, thank you very much. Bye-bye.
Bye-bye.